Friends Bakery started 2016 with total assets of $20,000 and total liabilities of $12,000. At the end of 2016, Friends' total assets stood at $15,000 and total liabilities were $9,000. There's two questions. First, did the stockholders' equity of Friends Bakery increase or decrease during 2016? And if so, by how much? Number two, identify the 4 possible reasons that stockholders' equity can change. Okay, so number one, did the stockholders' equity increase during 2016? So we started 2016 with total assets of $20,000 and total liabilities of $12,000. So at the beginning of 2016, you have $20,000 worth of assets. Okay, that's equal to all of the company's assets at some moment in time. The total value is equal to the total amount of liabilities that company owes plus the total equity. Okay, that means that at the start of 2016, Friends Bakery, the owners had or stated claim to 20,000 minus 12,000, $8,000 worth of equity. Okay, fast forward 1 year later, Friends' total assets has decreased by $15,000. I guess maybe they sold off some assets or they got rid of some assets for some reason, and their total liabilities decreased by $3,000. So yeah, maybe they sold off a truck or something, I don't know, and paid off some liabilities, who knows. But okay, at the end of 2016, let's redo the accounting equation, because like we said, the accounting equation is for moments in time. So the beginning of 2016 is one moment, the end of 2016 is another moment. So at the end of 2016, Friends Bakery has $15,000 worth of assets, of which $9,000 are claimed by liabilities, the rest being equity. So at the end of 2016, 15,000 minus 9,000, Friends has $6,000 worth of owner's equity, stockholders' equity. Okay, so during the year, there you go, the stockholders' equity, the balance decreased by $2,000. Okay, there's your answer to question 1. Okay, number 2, identify the 4 possible reasons that stockholders' equity can change. Okay, you can go a lot of ways here. Net income, net loss, revenues, expenses, taxes. You could say a lot of things, but at least for the book that I'm referencing for these problems, this is what they'll say. Okay, so how can, during a period, what will cause stockholders' equity to increase? What things are happening during a time period that are making stockholders' equity go up? Okay, well, for the accounting equation to increase, remember, something needs to come into your accounting equation or come into your business. Okay, so someone could give you money in exchange for ownership shares. So someone gives you cash. There's equity increasing. So common stock is issued, aka cash has come in. Okay, the other way stockholders' equity can increase would have to do with the retained earnings section. What would that be? Well, a net income. Okay, you made money during a period. You created equity, stockholders' equity from thin air. Okay, so a net income. All right. How can stockholders' equity decrease? What events during a period will cause stockholders' equity to decrease? Okay, you could take money out of the business to pay yourself. So money leaves the accounting equation, aka leaves the business. So dividends. And then also a net loss. So you ran your operations and it cost the company money. Your expenses exceeded your revenues. So a net loss. All right, there you go. There's answer to question number 2. During 2016, Jim Smoothies reported revenue of $55,000, Total expenses for the year were $45,000. Jim Smoothies ended the year with total assets of $30,000 and it owed debts totaling $10,000. At year end 2015, so at the start of 2016, the business had reported total assets of $20,000 and total liabilities of $10,000. Okay, question number 1. Compute Jim Smoothies net income for 2016. Okay, so net income during a period, net income. What is net income? That is just revenues minus expenses. They're not asking retained earnings here. They're asking what was the net income. Okay, so we all know what that is. So during a period, what was the total revenues and what were the total expenses? Subtract those two, there's your net income. That's it. So don't overthink the problem sometimes. Just trust your intuition. Understand wholeheartedly the material and trust your intuition. Okay? Because you might be tempted to start, breaking down all kind of subtracting assets, liabilities, doing all kind of crazy stuff. No, what was the net income? That's it. Net income, revenues minus expenses. So question number 1, during 2016, Jim Smoothies had $55,000 worth of revenue, and it had total expenses of $45,000, which means its net income, it's not going to be a net loss here, it's going to be a net income, was $10,000 for the year 2016. Okay, there you go. Question number 2. Did Jim Smoothies stockholders' equity increase or decrease during 2016, and by how much? Okay, so to know if its equity increased or decreased, we need to know what Jim Smoothies' equity was at the start of 2016 and at the end of 2016. So at the start of 2016, at year end 2015, aka start of 2016, the business reported total assets of $20,000 and total liabilities of $10,000. Okay, so if it had total assets of $20,000 at this moment in time, and $10,000 worth of those assets were claimed by liabilities, then the rest must be owner's equity. 20 minus 10, $10,000. Start of 2016. At the end of 2016, Jim Smoothies had total assets of $30,000 and it owed debts totaling $10,000. So its debts remained the same, but its assets increased by $10,000. Okay, so that's going to tell you that its stockholders' equity must have increased by $10,000 during this year, and it did. It went from $10,000 to $20,000. So question number 2, did Jim Smoothies' stockholders' equity increase or decrease during 2016? It increased by how much? $10,000. Okay, so we have this business here at the beginning of 2016. This business has this amount of assets, this amount of liabilities. At the end of 2016, its assets are now this and now this. Okay, during the year, the company takes out $16,000 worth of dividends due to operations. The company has $177,000 worth of revenues. It's asking us to solve for the expenses. At the beginning of the year, the retained earnings account balance for this company was $5,000. Okay, so remember from the previous videos, we zero out at the end of every period. The dividends, revenues, and expense accounts will be zeroed out, so you can get a good fresh look at how these accounts are changing during a period. But a company's retained earnings account or its common stock account will never be zeroed out. So when you look at these accounts at any point in time, you're just looking at, okay, to date, over 20 years or whatever, how much common stock or external cash has been contributed to the company. And to date, over the past 20 years, how much has the company retained in earnings? Okay, so these are never zeroed out. Retained earnings, common stock, assets, or liabilities are never zeroed out, but dividends, revenues, and expenses will be zeroed out periodically. So based on that, I was really looking over this problem in the book. I feel it doesn't give you enough information. It needs to tell you this common stock value, was this issued during the year, or was this the common stock account balance coming into the year? So if that is the case, coming into the year, January 1st, here's your common stock account balance, then that means that during the year there was no common stock issued. And as I solved the problem, it seems that is the case. What this means is entering January 1st, 2016, this was the common stock account balance, and at the end of the year, this was also the common stock account balance. So there was no common stock issued. And you need to know this because, okay, let's solve for the beginning equity. The beginning stockholders' equity at the beginning of the year was $73,000 minus $43,000 was $30,000. Okay. At the end of 2016, 1 year later, equity was $83,000 minus $45,000, $38,000. Okay, so during the year, stockholders' equity increased by $8,000. Well, where did that come from? If we received $25,000 worth of cash from investors, well, that's a good explanation for where this increase in $8,000 could have come from. But if we didn't receive any contributions, if just common stock was $25,000 to start and $25,000 to end, then that's going to offer a different explanation for where this $8,000 increase in stockholder equity came from, right? So, okay. So what I found from the problem was that, like I said, this account started at $25,000 and ended at $25,000. So there was no common stock received during 2016, which means that, to explain, during the year, we had an $8,000 increase in stockholders' equity. There was no common stock issued. So that means this $8,000 must have come from operations and dividends. Okay. During the year, since these accounts were zeroed to start the year, during the year, the company took out $16,000 to pay itself. Okay. So to make up for this, we must have had, since the equity increased by $8,000, we must have at least made $16,000 plus an additional $8,000, right, to make this work. Okay, so plus the revenues were $177,000 minus whatever the expenses were. So dividends less the net income, right? Solve for X. That means during 2016, this company had $153,000 worth of expenses. Okay. Question number 2, did the company earn a net income or suffer a net loss for the year? Compute the amount. Okay, well, this is easy. What were its revenues and expenses during the period? Well, its revenues exceeded its expenses, so it had a net income of what? Okay, revenues minus expenses, $177,000 minus $153,000. Net income of $24,000.